So in our section F, we shall look at the key drivers of the market. We have the economic factor, geopolitical condition, and the trading psychology. So let's look deeply about them because they are very important. Once you know what is driving this market behind behind the technical analysis, what you see, it's also very good for you because you can be an intelligent, well-informed trader. So let's look at them. So when we talk about the economic factors here, we see that economic factors are tools of financial and economic data published mostly by government agencies and the private sector. So these statistics help the market observers to monitor the economy's growth or fall. So these economic indicators are used by most traders in the world. Economic indicators have a big potential to generate volume and move prices when so many people react to the same fundamental information. So you should mark your economic calendars as how we actually looked previously when we are talking about these fundamental analysis. So this helps you consider trades that are yet to happen or what's happening. It helps us to explain changes in the currency movement. Example can be USD falling for 3 weeks. Of course, here many traders could be shorting it, but US employment data is to be released. So if to look promising, traders can unwind a threshold position before Friday reaches. So economic calendars can be found on various websites like Forex Factory, FX Street, and Investopedia.com. So let's talk about the consensus in market. So in most cases, when the news report is released, market movements doesn't match what the report actually is saying. For example, if US unemployment for last year was 8.7 and we expect it to be 8.9, it means that most expected results are a weaker dollar. In most cases, bigger market makers won't wait until the report is actually released. They are going to sell off their short position early and open long position. Let's say that there is news release time has reached and it is how we expected it at 8.9. Now you go at your platform and short USD, but instead the trend changes to upward. So most of the retail traders, we call it manipulation of data. But if you don't know this knowledge, you are going to be a victim. That's why you should be following this knowledge. So you wonder who on earth wishes you bad luck. This is because big market makers sold off their positions early and opened the opposite direction. So not when trading news, use a buy stop and sell stop strategy or straddle strategy so that the market hits the direction and you move with it. So let's talk about the geopolitical conditions. So these also move the markets because they determine the value of currencies and economy of the country. So a trader should keep an eye on them and always be updated. So let's look at the geopolitical conditions. We have the wars. For example, the Ukraine-Russian wars, which happened, which is caused a lot of chaos into the economy of Europe because they were exporting the gas from Russia. Our political unrest, political news everywhere. You understand the Cold Wars happening. All these ones are causing market movements to vary. So I have the natural disasters. They lead to economy, bad transportation, bad weather, which leads to economy delay of supply and of goods, all affecting the market. We have the elections. This one, you know it very well. These ones affect uh, markets on a deep levels, where even sometimes during big elections, markets are closed not to function. So we need to be extremely very careful with these factors. There are also other factors. As you do your research, you're going to be uncovering others and you write them, note them in your notebooks. Remember, I told you should be a research student. A good student who makes it is one who loves to do extra research. Let's look at the trading psychology. We see error is human, but in trading, it often happens that traders will knowingly make decisions that create losing trades. So now we are not talking about losses that come about because of testing out a trading plan or specific indicator. Nor are we talking nor are we looking at simple errors committed purely by accident. If our goal is to profit, then why would we do things that are clearly against what we know is right or is to be right? So this phenomenon has many very undesirable consequences that are experienced quite regularly in the trading world. A person's confidence can take a severe blow when these intentional mistakes occur on top of the loss of the money. So the other after effects often include a lot of putting oneself down for having done these things. So depending on the magnitude of the error, this can wind up a rather nasty cycle that compounds the problem and sets the stage for it to happen again until the source of the issue is discovered and the trader takes action to address it. So the self-sabotaging behavior is likely to happen again and again. So this isn't a limit to new traders either. So let me give you an example here. One such a trader, real person that let's call him Mark, of over 50 years old, had been going through this month after month over a decade, 10 years since becoming an individual trader from home. So Mark has just done about everything in the futures industry that there is to do. So he worked on soybean farms and as a shipping docks, loading ships and coordinating shipments and others. So for about another decade, Mark ran orders on the exchanging floor. From there, he worked both for and as an introducing broker, that is IB, in the commodities industry until he decided to retire at the age of 59, sorry. So needless to say, Mark had plenty of experience in trading, but for nearly 15 years. So Mark has been losing money, but why? Why does he keep doing it? Trading is definitely nothing new to Mark. As a broker, he was very successful. He's tried just about he's tried about every strategy and system there is. So he is pretty sharp and knows his way around the computer and what he's looking on the charts. So Mark might make $600 and $800 more often than others. Not he loses. So when his wife gets home from work, yes, she is still works at the age of 70. He's usually brooding his way chair after kicking himself and calling himself stupid or idiot. So this is like a story I'm trying to tell you. So in all these years, he's still yet to end the year in the black. He's also concerned about how much longer his wife is going to let him keep on his way. They'll be under pressure. So when asked why he continues to trade this way and why he doesn't make use of a system that he knows can make him money, he simply says that he doesn't want because they are boring. So this is very true. A well thought out trade where you know that you will do before you get in, regardless of which way the market moves, can be very boring. However, when you enter trades without a plan, or if you have deviated from your system, the suspense can be very intense. So in most cases, we don't have a trading plan. We think that we shall just enter the market and make money. No, that's not how it's going to be. So why do people take time to sit through movies instead of going straight to the end if it is hero triumphs or fails? And why do millions of people watch baseball games rather than simply check the scores in the morning? It is the suspense, the excitement of not knowing the outcome. So that brings the thrill, the movements, the moments that are just enjoyed and fully hold our attention. Sorry about that. When the ball is in air and we don't know if it will be caught or dropped. So when the hero's fate hangs in the balance as humans, there is a part in all of us that craves the excitement. So at the conscious level, profits are what everyone wants. Who doesn't? Many people choose trading because trading offers the opportunity to realize very significant financial gain. So the real risk is that it also offers the thrill that another part of us craves at the subconscious level. So when we are trading, we need to be very careful and we need to always follow through our plan. We do a trading plan, we do our trading lot sizes plan, and the amount of money we need to make by calculating the pips, take profit and stop loss. But we need to know if the market is really moving in our way. We don't have to just sit and wait for results. We can check, then be busy again. So that is the trading, the psychology of it.